Welcome back to the Deep Dive. It is Monday, February 2, 2026, and I have to be honest with you. I'm looking at my screen right now at the markets, and I feel like I'm taking crazy pills.
Yeah.
We are looking at a situation today that I can only describe as I don't know, a massive glaring paradox.
It really is one of those days, isn't it? If you just glance at the price charts on your phone, you probably want to throw it across the room.
Right.
But then if you actually sit down and read the business wire, you'd think we were in the middle of some golden age for digital assets. The disconnect is wild.
Okay, so let's set the scene for everyone before we get into the weeds. It is ugly out there. Bitcoin has dipped below $84,000. The broader market is feeling very squeamish because the Federal Reserve just announced they're pausing rate cuts, which nobody wanted to hear. And the star of our show today, XRP, it's trading around 160.
Just brutal.
Brutal. That is down significantly from where we were in January.
Right. It's a classic risk-off environment. You have soft earnings from tech giants like Microsoft. The Fed is holding steady, and so the big money is, it's pulling back into safer harbors. When the macro weather gets bad, everything gets wet, crypto included.
But, and here is where I get confused, while the price is just bleeding out, the fundamental news for Ripple and the XRP ledger has arguably never been better.
Never.
I was reading through the research packet you sent over, and there is a number in there regarding a new integration that I thought it was a typo.
It was not a typo.
You're sure? Because the number I saw was $5 trillion.
That is the number, 5 trillion. And that, I think, is the anchor for our entire conversation today.
Okay, so that's our mission. We need to bridge this gap. We need to explain why the charts look like a bear market while the infrastructure looks like a bull run on, steroids. We're going to unpack a massive partnership with a company called DXC Technology, a regulatory win in Europe that basically changes the map, and some very dense, very important upgrades happening on the ledger itself.
It's a classic case of price versus value, but usually that gap isn't quite this wide.
So let's start there. The big number, $5 trillion. This comes from a partnership between Ripple and DXC Technology. Now, I consider myself pretty plugged in, but DXC isn't exactly a household name like Apple or Google. Who are they?
They aren't a household name for you, but for your bank, they are absolutely critical. They're a titan in the IT services world. And specifically, we need to talk about a piece of software they own called the Hogan Core Banking Platform.
Hogan. Sounds like a wrestler, not a banking system.
It's decidedly less entertaining than a wrestler, but way more important. Think of Hogan as the operating system for a bank.
Okay.
When you swipe your debit card, when you deposit a check, when a bank calculates interest, that is all running on core banking software. Like Hogan, it is the plumbing.
And what's the scale here? Because, plenty of companies make banking software.
The scale is what makes this news matter. The Hogan platform, it supports over 300 million deposit accounts globally.
Wow.
It processes that $5 trillion in global deposits we mentioned. And to give you a concrete example, this software underpins 6 of the top 10 banks in the United States.
6 of the top 10.
And it handles nearly a quarter, 23% of all U.S. card transactions.
Okay, that is massive. But I have to play devil's advocate here. We have heard the word partnership thrown around in crypto for 10 years.
Oh, yeah.
Usually it means Bank X is running a pilot program with Ripple on a side server somewhere, and then 6 months later, we never hear about it again.
Never hear about it again.
So why is this different? Why should we care?
That is the right skepticism to have. You are absolutely right. Pilot purgatory is a real thing. But this is not a pilot with a bank. This is an integration into the vendor that supplies the banks.
So they aren't selling to the tenant. They're upgrading the building.
Precisely. Think about it this way. If you are a major U.S. bank, you are likely running on mainframe technology that was built in the 80s or 90s. It's written in COBOL. It's ancient.
Right.
You are terrified to touch it because if you break it, the economy stops. You cannot just rip and replace your infrastructure to add crypto. It's way too risky.
It's like trying to change the foundation of a skyscraper while people are still working inside it.
Exactly. So what DXC and Ripple have done is create what they call an embedded digital asset layer. They integrated Ripple's tech directly into the Hogan platform. So if you are a bank using Hogan, you don't have to build anything new. You don't have to rick out your mainframe. You essentially just have a new menu option that bridges your old, reliable mainframe to the blockchain cloud.
That does sound a lot stickier than a pilot.
It removes the friction. Now, a bank can offer digital asset custody or tokenization or faster settlements using the software they already log into every single day.
And this brings us to RLUSD, Ripple stablecoin. I assume that's the oil in this engine?
It's the rail. Within this Hogan system, RLUSD is positioned as the bank-grade stablecoin. So if a bank wants to settle a cross-border transaction, instead of waiting 3 days through the old network, they can use RLUSD on the ledger.
And that's instant.
3 to 5 seconds.
But let me push you on this embedded idea. Just because the feature is there, does that mean banks will actually use it? I mean, I have plenty of apps on my phone with features I never touch.
That is the big question. Just because the pipe is installed doesn't mean the water flows immediately. But consider the pressure banks are under. They are losing ground to fintechs, to payment apps.
Sure.
They need faster settlement. They need to tokenize assets to save money. This integration gives them the ability to do that without the capital expenditure of building it all themselves. It turns a $10 million R&D problem into a software update.
So the barrier to entry just dropped to near zero for 6 of the top 10 U.S. banks.
Correct. And even if they only move a fraction of a percent of that $5 trillion onto the ledger, the volume implications for the XRP ecosystem are just astronomical.
Okay, I see the plumbing argument. It's boring, but it's big. But plumbing needs permits, right? You can't just move money around because you have the software. You need the license. And there was some breaking news out of Europe this week that seems to address exactly that.
This is the other half of the pincer movement. Ripple just received full approval for its electronic money institution license, the EMI, from the regulator in Luxembourg.
Now, for those of us who aren't international finance lawyers, why Luxembourg? It's a tiny country. Why not Germany or France?
Luxembourg is small, but it punches way above its weight in finance. It's a Tier 1 jurisdiction. But the real magic word here is passporting.
Passporting. Explain that to me like I'm 5.
Okay, so imagine if you had to get a new driver's license every single time you drove across a state line. You drive from California to Nevada, you need a Nevada license. Nevada to Utah, a Utah license.
A nightmare.
Right, that is how banking compliance usually works in Europe. It's a total nightmare.
Sounds efficient.
It's terrible. But an EMI license from a reputable jurisdiction like Luxembourg acts like a federal ID. It allows Ripple to passport that license across all 27 member states of the European Union.
So one license unlocks the entire continent.
Yes. They can now offer regulated payment services and e-money issuance in France, Germany, Spain, everywhere, without applying for 27 different licenses. It creates a unified compliance zone for them.
That is a massive operational unlock. And speaking of compliance, we have to look at Japan. We've known for a while that Japan loves XRP, mostly thanks to SBI Holdings, but there is a new legal classification coming in Q2 of this year.
This is huge for institutional adoption. Japan is planning to classify XRP as a regulated financial asset under their Financial Instruments and Exchange Act.
How is that different from what it is now?
Currently, crypto occupies a bit of a gray zone or a crypto asset bucket in most places. By moving it under the Financial Instruments and Exchange Act, Japan is basically treating it like a stock or a bond.
Why does the label matter so much?
Because Japanese institutional investors, I'm talking pension funds, corporate treasuries, they're incredibly conservative. They cannot touch gray zone assets. Their charters forbid it. By stamping it as a regulated financial asset, the government is essentially telling these massive pools of capital it is safe and legal to touch this.
It sounds like the theme here is just compliance first. While everyone else was breaking things, Ripple was asking for permission.
It has been their strategy for a decade, and it is finally paying off. And we can't talk about permission without mentioning the United States. The SEC lawsuit was officially dismissed yesterday, February 1st.
Finally. I feel like we've been talking about that lawsuit since the Stone Age.
Yeah.
But I have to ask, the market reaction was, tepid. We saw maybe a 15% rally, and then it just cooled off. Why didn't we go to the moon?
Because markets are forward-looking. Everyone knew this was coming. It was priced in. But the value isn't in the one-day price pop. The value is clarity. Ripple can now operate in the U.S. without looking over its shoulder. Corporate counsels at big companies can finally sign off on deals because there is no pending litigation. That is worth so much more than a green candle on a chart.
So the legal shackles are off, the European doors are open, and they are embedded in the banking software. But I want to pivot to the technology itself, because the ledger isn't just sitting there. It's getting an upgrade that sounds, well, a bit nerdy, but you claim it's revolutionary.
It is the biggest shift in the ledger's history. We need to talk about the new lending protocol, Amendment XLS 66-pin.
Whoa, hold on. Lending in crypto usually means Ponzi scheme or hack me. I just think of those DeFi protocols where people put their money in a pool and wake up to find it gone.
And that is exactly why banks haven't touched DeFi. The current model is all based on pooled risk. You put your money in a giant pot, I borrow from that pot. If I default or if the smart contract has a bug, everyone in the pot loses. It's contagion.
Right. If one apartment catches fire, the whole building burns down.
Exactly. The new protocol on the XRP ledger changes the architecture entirely. It uses single asset vaults. Think of these more like safety deposit boxes.
Yeah.
Or isolated bunkers.
Okay, explain the difference.
If you lend money in a single asset vault, your risk is isolated to that specific borrower and that specific contract. If a borrower defaults in Vault A, it has zero impact on Vault B. It prevents the fire from spreading.
So it's compartmentalized.
It's institutional grade. And this is not for day traders chasing 1,000% APY. It offers fixed-term loans, 30, 60, 180 days with preset repayment schedules. It brings the predictability of the traditional bond market to the blockchain.
And are the validators on board with this?
Voting started January 28th. The default vote is nay initially. That's just a safety procedure. But they need 80% consensus. Given who the validators are and the utility this brings, it's highly likely to pass.
There's one other technical term in the notes that I need you to translate for me. Formal verification. The notes say it's catnip for regulators, which is a hilarious image. But what does it actually mean?
This is the difference between testing and proving. In normal software development, you write code and then you test it. You run a million scenarios. You drive trucks over the bridge to see if it cracks.
Sure.
But you can never test every single scenario. There might be a 1 in a billion bug.
And for a bank moving $1 billion, 1 in a billion is way too risky.
Correct. Formal verification, which Ripple released a spec for back in December, uses advanced mathematics to prove the logic of the code is correct. It's not driving trucks over the bridge. It's using physics equations to prove that the bridge cannot collapse under the laws of nature.
That is a very different level of confidence.
It is. When you go to a regulator or a central bank and say, we tested it a lot, they shrug. When you say, we have a mathematical proof of correctness, they listen.
Okay, so we have the math-proof bridge, we have the isolated lending vaults, we have the licenses. But, and I hate to be the buzzkill here, we have to go back to the price.
The elephant in the room.
XRP is trading at 160. It's down roughly 19% from the January highs. I'm listening to you and I'm thinking, this sounds great, but I look at the chart and it looks like a disaster. If the news is so good, why is the price tanking?
It's a valid frustration. First, we have to respect the macro flu. When the Fed paused rate cuts, the dollar strengthened. When the dollar gets strong, assets priced in dollars like crypto go down. Tech stocks took a hit too.
So it's not in a vacuum.
It's not in a vacuum, it's just dragging along with the NASDAQ in some ways.
But is that the whole story?
Partially, but you have to look at who is selling and who is buying. Retail sentiment, the average person on Twitter is fearful. They're impatient. They see the price drop and they sell. But look at the whales. Wallets holding millions of XRP are accumulating in that 180 to 195 range. They are buying the dip.
What about the ETFs? We have those now.
Same story. Despite the price drop, the XRP ETF saw nearly $17 million in net inflows on January 30th. Institutional investors are looking at these prices as a discount. They're looking at the DXC partnership and the EMI license, and they're positioning themselves for the next 5 years, not the next 5 minutes.
Still, I have to ask, why didn't the DXC news, that $5 trillion headline, cause an immediate explosion?
Because infrastructure is boring, and it's slow. This isn't a meme coin getting listed on an exchange where everyone buys it that second. This is plumbing. Installing the pipes takes time. The market is waiting to see the actual flow of money, not just the announcement of the pipe.
It's a show-me market.
Exactly. The analysts are watching 150 as a key support level. If it breaks that, we could go lower. But the bull case sees a recovery to, $2.35 or even nearly $3 by year-end if that infrastructure starts actually processing volume.
So we wait for the flow. But while we wait, the community is looking for answers. We have Community Day coming up on February 11th. What's the word on the street?
CEO Brad Garlinghouse is expected to make a big revelation. The rumor mill is just spinning out of control.
What are the leading theories?
The most credible one involves Saudi Arabia. We've heard whispers about a partnership with Jil and Riyadh Bank for a while.
Why Saudi Arabia specifically?
Context matters. Saudi Arabia is in the middle of Vision 2030. They are trying to pivot their entire economy away from oil and into tech and finance. They're digitizing everything. If Ripple lands a central role in the Saudi digital transformation, that is a massive geopolitical win.
That makes sense. But there's a darker theory circulating too, isn't there? It feels a bit like a conspiracy thriller.
You're talking about the Dr. Russell McGregor story.
Yeah. I saw mentions of Jeffrey Epstein in the show notes and did a double take. How on earth is he connected to XRP?
We have to tread carefully here because this is highly speculative, but you have to understand the psychology of the XRP community. They just spent 5 years fighting the SEC. They feel they were unfairly targeted while other projects got a free pass. There is a lot of scar tissue there.
They want to know why us.
Exactly. Dr. McGregor is digging into the early days of crypto regulation, suggesting that there may have been outside influences, potentially linked to Epstein's circle, that steered regulators to hurt Ripple and help others.
Is there any hard evidence?
It's mostly circumstantial and, connecting dots right now, but the fact that it's getting traction shows you how much trauma exists in the community. They are looking for the origin story of the lawsuit. They want to expose the corruption they believe held them back.
It's fascinating sociology, if nothing else. It shows the community isn't just investors, they are crusaders.
They are, and that passion is part of what kept the project alive during the lawsuit.
So let's wrap this up. We have laid out a pretty stark picture. We have a price that is suffering from a macroeconomic flu, but the patient Ripple and the XRP ledger structurally seems healthier than ever.
That is the perfect summary. The divergence is at an all-time high. They are embedded in the vendor for $5 trillion in deposits. They are fully licensed in the EU. They are about to launch institutional-grade lending. The foundation is poured, the steel is up, and the inspectors have signed off.
It really leaves us with a provocative thought for you, the listener, today. If Ripple is now technically integrated into the software that runs 6 of the top 10 U.S. banks, what happens when someone finally flips the on switch?
That is the trillion-dollar question. Is the current price of 160 a reflection of the asset's actual value, or is it just a reflection of the market's impatience? Infrastructure is boring until it changes the world, and usually by the time it changes the world, the entry price is long gone.
Infrastructure is boring until it changes the world. I love that. Something to chew on while you watch the charts and try not to panic. That's it for today's deep dive into the state of XRP. Stay curious, keep digging, and we'll catch you on the next one.